go. Okay, can y'all see my screen?
Mm-hmm.
You can see it, Emma?
Yes.
All right, perfect. So today we're going to start with facing startup challenges for Black businesses. This is brought to you by Venture Noire and Kiva NWA Hub with the Startup Junkie Foundation. And this is just, a lunch and learn kind of panel discussion, conversation we're just going to have on what are the challenges dealing with Black businesses and particularly receiving startup funding, non-traditional loans, micro lending, VC funding, a couple of big topics that we're just going to discuss. But I want to start with who I am. My name is Alvin Singh, originally from Nashville, Tennessee. I'm an author, a digital strategist, but more importantly, my day-to-day is as a program associate for Kiva NWA Hub, which is an initiative that we started in collaboration, or actually with the Walton Family Foundation. And I'm going to briefly, and we've got Emma Willis, fantastic. She's going to tell you all about herself. Before we get to her, my introduction to her, let me just tell you a little bit about the work that I do at Startup Junkie and what we're doing. If y'all can y'all see this website? Perfect. So this is our website here. It's Kiva/NWA.org. Me and Martha, she is our capital access manager, where she works to help with the local entrepreneurs to apply for various loans, micro lending loans, so that they can, get that extra boost for COVID relief fund during this time period that we're in. It started in December 2019. Lucky it started at that time because a few months later, we know things changed around the world, and those funds were allocated to help some of the businesses, over 32 businesses we've been working with right now. Here is a few of them. We've got one live right now, Coretta, woman owned. She's got a therapy center that she's getting pretty close to funding too. Jermaine had his food truck. Carl, he had a construction business. Martin, he has a nutrition supplement company. Mike, he has a workout equipment. And so it's tons of stories. We've got Lamar with his detailing business, where they came in saying, hey, let me apply for this loan. What can I do to boost my business, whether it's more for marketing or where it's more for inventory, or just keep the doors open. Statistics would tell us that over 180,000 businesses closed because of COVID. It was the statistic that I read, it stopped at September, where 180,000 closed, and about 96,000 of those were permanently closing. Those facts, as we're going to see, is even more haunting for minority-owned businesses. But for a quick little thing on what Kiva does and who is Kiva, it is an international organization. They've got 3.5 million borrowers. They work in over 77 countries. They've got 1 million lenders, and the repayment rate billion worldwide. Now, this Kiva Global, the way I thought about it or think about it is how I first heard about Kiva. When I was in South Africa, I heard about Kiva because they were helping small farmers. Many of them were women-owned farms, from Cambodia to South Africa to Kenya to Tanzania. And, it's not like here in the US where agriculture is, thousands of acres. Many of them there have 2 to 3 acres, and they're growing multiple crops on 1 to 2 acres. And so these small loans, micro loans that they found out were very helpful for those people in these countries that were entrepreneurs. And so that's where Kiva's impact came from. It has a US division, which we are doing right now, which is helping entrepreneurs locally, what we're doing. And what was the problem? The problem was missing, I guess, with microloan was solved. And there's a good book by Muhammad Yunus, who's an economist from Bangladesh. And he's really good on saying some businesses just need $100. They need $1,000, you know, and they don't have the collateral. They may not even have, for example, established credit, or they may not even have an audit business, you know, financial system, but they're running businesses day to day and they're, you know, employing people. And so with this problem that we've noticed was also an issue here in the United States. There's a lot of entrepreneurs who are under the radar, who may not be documented, immigrants, or people who just may not have collateral. As we know, most businesses will start with family and friends and your personal savings account. And that's not enough. When you go to some traditional banks, when you're asking $100,000 loans, you know, $50,000 loans, there's a lot of process that overwhelm a lot of entrepreneurs. And so that was the problem. What was the solution? What Kiva does is they have a 0% interest rate, which we run, and we're doing funds from up to 1 to 15,000. The 15 is for COVID relief. It was 1 to 10,000, but ours is a 1 to 15. And you can repay that over time in one account, a PayPal account, to all the people that lend to you. So to think of it as unlike GoFundMe or Indiegogo or Kickstarter, where people are donating to you to help your business, and then in hopes they get a prototype, or they get your film, or they may get, you know, your first Bluetooth speaker that you're building. What Kiva does and what micro lending does is we're lending to you, get a small payment each month, and we're helping the community. And that's the kind of thought process behind Kiva, because it's a nonprofit, so they don't, you know, make money from it like a traditional bank. And it's been working really well, because when you start and when you're doing the process, I'm not going to talk too much about the whole process, but when you do the application, it goes private. And when it's private, they would say find 5 or 10 lenders at $25 each. These lenders is sort of your collateral, because if you can get a family member or a really, you know, customer that comes a lot to support you, then you go live. And when you go live, I'll give you an example of like Coretta's. When you go live, it then reaches out to that 1.9 million people who are in Kiva. And she's at 72% right now. She just started today. So she'll be getting this 8,000 very soon. Once she's gone live, there's tons of people that wake up every day and say, who can I support? And they look at her story, which we put together, and they look what she's trying to fund, and they donate. And thanks to us, we have a dollar for dollar match with the Walton Family Foundation. So that's very helpful. And why is this good? Is because it's the first step towards capital ladder. We want to look at it as what are the stages that you can take your business. You know, I personally, and I know Emma dealt with the VC world, where we're dealing with, you know, technology startups, you know, who are trying to change the world and come with so much big solutions. But at the same time, there's businesses like your local bakery, your food truck, your sewing, your clothing boutique, tons of those, detailing, all of these small businesses. But Kiva is a way for them to climb that ladder. So if they're able to repay their loan back, they then can come back to a traditional bank and say, hey, I paid $10,000, you know, in the Kiva loan, and, you know, I would like to ask for more money, or, you know, or they can reapply back to Kiva. So that's the mission. That's kind of what I do. And you're more than welcome to follow us on Facebook. I'll share that later. I don't want to take any more time for Emma explaining the great work that she does, the many hats that she wears. Emma?
Thank you, Alvin. My name is Emma Willis. I'm currently the director for the Venture Noire Heartland region, as well as Chief Operating Officer for Suchi, a fintech startup in Los Angeles, and an entrepreneur myself. Launched a jacket line a couple years back called Fox Hunt, and it is honestly by invitation only. So where most entrepreneurs are out there creating products to sell on the shelves on a regular basis, I kind of take my time and do that case by case. And in terms of Venture Noire, what we do, our mission starts at the beginning of any great entrepreneur story, which is the tinker ideation phase. And what we've observed in our work when it comes to a lot of minorities is that that foundation has not been set, nor have they been given the guidance on what to expect or anticipate on the road of becoming an entrepreneur. And there are many struggles. Funding is one of them. And so last year, Venture Noire was offered or given or awarded a grant by the Walton Family Foundation that allowed them to start their work here in the Northwest Arkansas region. That work consisted of a number of programs, a number of events, and for the most part, awareness around what Venture Noire is setting out to do. In the recent months, Venture Noire has decided to really dig deep and focus on the fact that we want to build entrepreneurs of color, specifically here in the Heartland, specifically Northwest Arkansas region. So what that looks like for us is the creation of a number of cohorts annually, which will run about 8 weeks, and those will be intensives. Most people know those as accelerators, but we're taking a step back from the traditional accelerator model and really understanding what the minority founder struggles are. So we'll talk about it through the course of this panel where we are, but at the end of the day, Venture Noire is here to get our minority founders prepared for the world of entrepreneurship and to get them even more prepared for success and the ability to scale those companies and grow.
Wonderful. Can you at least explain some of your own hustle and your own business?
That will take more time than we have today. But I formerly wore the hat as executive director for the state's 529 plan, where I grew that plan from some $600 million in assets under management to now well over $1 billion in assets under management. That was all grassroots, a lot of organizing, a lot of networking in order to build awareness and grow a little known plan that helps you save for higher education. From there, I left as executive director, took a job as senior strategist for Mangan Holcomb Partners to get their vertical launched here in the Northwest Arkansas region, got them off on a really good start, and then decided to take a role as chief operating officer at a fintech, which is giving me a great deal of knowledge about the world of technology startups. I have to say, it's a fast and furious and actually fun and chaotic space to be in. It's not for everybody, but it's definitely taught me a great deal about what it means to honestly disrupt. So currently working as COO and still carrying the torch for Venture Noire as well.
Fantastic, fantastic. Well, let me share my screen again. I want to wrap some things in context while we're talking. Y'all can see the screen, right? So Emma, let me ask you this. Have you ever heard of Maggie Walker?
I don't think it's fair to ask me, but yes, I have.
No, I didn't either. Maggie Walker, I did not know until I was reading a book recently, which we're going to give as a giveaway. And what a fascinating woman she was. She was the first African-American woman to charter a bank and the second woman to become president of a bank, for any bank. And remind you, she was born 1894, but she died in 1934. So that's the time period that she was alive. She was in Richmond, Virginia. And I mean, she basically, what was interesting with her story is that she started off with a savings bank as part of a group. In that group, she said, hey, with 1,500, let's start a savings bank. And this penny savings bank ended up becoming an actual charter bank, which then, thanks to her, was able to do many different things, as we know what a financial institution can do for a community. One fact that came up was they was able to loan for 600 homes for, people. and she was able to help businesses and different causes. And so I find that interesting because when we look at banking today, Emma, the Black banks today, we have one of the largest ones is One United. And that is the largest Black-owned bank, and it manages $650 million in assets. Now, in comparison, Wells Fargo, Bank of America, Chase, they each have 1 trillion in assets. So the largest Black-owned bank in the United States doesn't even manage 1 billion assets. And then another one that and this is where my question to you can be. What was good news is about recently Hope Credit Union, which I think they're based in Montgomery, Alabama. They recently landed a $10 million deposit from Netflix because Netflix had pledged to put 2% of its holdings in its Black banks. What do you think, I guess, from not the business side, but just like the Black banks, financial institution side and that of situation, do you see not just Black-owned or minority-owned businesses banking their money with Black-owned businesses, but what is the importance of it of other markets and other corporations doing the same?
I think first, the most important thing is awareness that they exist. I think a lot of times we really do think of banks and they just hold a position as an institution, but not necessarily a face. So you don't always remember that it's a Rockefeller or, somebody from, the Morgan family that started these establishments. Instead, for the Black banking community, I think it's important to know that, it's the same thing with what's currently happening in the community. You want to see somebody that looks like you that's able to do it. And I think Black banks really give you an opportunity as an African American or a person of color to go in and know that that person understands what you're going through and what your struggles are. And I think Netflix has identified the fact that a good chunk of their consumers are people of color. So why shouldn't we invest in that space as well? So for me, it's companies taking some responsibility at this point in time and understanding the value of them bringing awareness to these establishments.
Yeah, no, that's a good point because I was also reading in Fast Company, I think it was something about the 12% pledge, 12% pledge with Sephora. And how a lot of the companies are trying to say, well, let's make more of our shelf space, towards Black-owned or minority-owned businesses and having that. So that's one part. And like what you said with Netflix, actually putting their money in some of the Black institutions, because we know those institutions and communities can then lend to us and other, local entrepreneurs in the area. That this was the quote on the bottom from one of the bankers that was saying, it's tough to have a customer base that's last hired and first fired. How important is these financial institutions, do you think, for business owners in the community dealing with housing and even things what you were doing with 529 and educational funding? What do you see the importance of them?
I think first and foremost is the importance is for, more minorities to have ownership in spaces. And so you'll see a lot of your CDFIs or spaces like Hope Credit Union really focus on giving that lending that's necessary for you to help establish yourself. And we all know how important home ownership is in the course of you trying to actually deal with wealth, be able to maintain that wealth and have other things in the future. So it's important in a lot of ways. One, the first thing is, you got to be able to go in a bank and be confident that you aren't going to get rejected because of a credit score. So a lot of times these banks have already structured themselves to be able to meet the people where they are, understand what those issues are that exist. And that quote pretty much is what sums it up. You're the last hired and the first fired. So there's a lot of volatility in bringing that person into your bank in the first place. Right. Banks like to see money sitting in places.
Right.
A lot of times with minorities, that money is moving in a revolving door.
Right.
We're a paycheck to paycheck community. And you need somebody that understands that and is not really there for personal gain, but is actually there for overall support. So it's a huge cornerstone of your ability to have upward mobility.
I definitely agree on that. This was one that came up in reference to the
Shocking.
pandemic.
Yep.
41% Black-owned businesses declined in those
Mm-hmm.
first 3-4 months. That's a lot.
And that means that they didn't have too much money. It was one day to the next,
right.
the difference between you being able to keep your doors open. So,
and just something that came boom like that caused them, and a lot of these are permanently closed, not just really restaurant. And there's 32% for Latinx business community. Here's some other numbers that the bullet point. Yeah, there it is. 12% of Black businesses received the PPP. That was recently given. And what you were saying that was important with home ownership, because home ownership ties in, as we were saying, some of the collateral that people are using, or the friends and family rounds, or, to pass on a house. 46% of Black households are fully banked, and 77% white households are banked.
I think what's important here, Alvin, to really point out is, that 12% of Black businesses receiving PPP, and understanding where most Black people or minorities bank is going to be a credit union. Those weren't the banks that were pushing out PPP primarily. So what you're seeing right now is an effort to correct, what the initial administration did in terms of PPP, which is pushing that money through major banks. And a lot of us didn't use those major banks to be able to go in and ask for those dollars. So that was barrier number one. And so in light of the PPP lending, the second wave is starting to send those dollars through Hope Credit Union, Arkansas Federal Credit Union, and a lot of other credit unions. And I think still with them understanding where they made a misstep, you still have to recognize the fact that the money is not as widely available in those spaces as it still is in some of the larger banks. So there's a lot of lessons here. I think one thing we did get right with the PPP was they did offer forgiveness for a good deal of the loans. I think that's great, because that's one less thing that people have to worry about or be concerned with in the course of a pandemic, when you're just dealing with uncertainty, on a regular basis right now.
Well, like, as always, she's dropping a lot. We're both having a lot of good conversation on things. I just want to remind everybody, because we're dropping some things, try to remember, take some notes. Where's my book? Here it is. We're going to give this book away to someone who can drop us some jewels or tell us what they learned from it. I'm going to tell you how to do that later. But because I just want to let you know that as we take notes into what we're saying, because it's going to be very important. It's a lot of information. We know 90% of those institutions closed during the financial crisis. So now the bank is nowhere near. I want to talk a little bit more now about the tech VC world. This is, is very interesting because one, technology, startup world, online, digital world, everything, is a entirely new, well, it's not new now, but it's a business models that wasn't there before, right? So how do you evaluate a social network, or how do you evaluate a video app, right? Or how do you value a peer-to-peer or gig economy app, and so this one that came was that the tech VC distributed 3% to Black founders, and less than, of that was 1% towards Black women or founders. Now, me, myself, a few years ago, I met a young lady named Jewel Burks. She was the CEO of PartPick, and she's from Nashville. So we knew each other actually through family and friends. And when she kind of pitched to me and my mom of this idea of this app that you take pictures of the screws and nails and bolts, and when you take the picture, it's going to tell you what store to get it, because what she found out was farmers or plumbers or mechanics were asking for parts. There wasn't a database for it, and they would call and they'd get a part, but it'll be 2 inches too big or 2 inches too small. And so then you got to send it back. So there was $1 billion of this industry of sending back your parts. And so she came and said, hey, I've got a solution for it. And she had her team. had a co-founders, had a developers, and we invested, you know, just a small amount. But the good part is that over a time period, it took her so long to get $1 million in 3 years, $1 million, and two former Google and one Shazam. Like, I mean, the team was fully loaded, and it was in Atlanta actually. But it took her a long time to hit 1 million in funding. Good thing is that Amazon acquired it, and so that was a good thing. But it was a sense of, I wonder why that took so long, you know. And what would you say is some of the experiences as an African American woman and in the tech industry and just period? That was a woman, period.
So I'm gonna talk about this in a couple of different ways. One, and it's gonna be pure observation. I think a lot of times in the tech space, we don't understand that ideas a lot of times sell more than an actual tangible product. And if I can quote somebody I talked to recently, because we're getting ready to start a capital campaign, a lot of times the VCs are betting on the jockey and not the horse. And so they want to see you come in with this, I don't know, it's a fever, it's desire, it's this real intention to create something special and magical. It's sleepless nights, it's a lot of long working days, and a lot of times for women, we don't even know where to start and who to ask. And a lot of times that's our biggest barrier is our network. Because for a lot of the companies that you see out there, there's an extensive network that allows them to move from one person to another rather rapidly to get to the right people to have the money. The other thing about women is we a lot of times go in and we don't always know what it is that we need to ask for. So we either undersell ourselves or we overstate the numbers. It could be a number of factors. But I can tell you from working in finance, you know, we're the most risk averse out of either gender. We just don't like uncertainty. We don't want to hear a no. And it could cause some apprehension when it's time to raise capital. And I think what you have to remember when it's time to raise funds is the confidence in yourself and your ability to get the job done more than anything. And to speak to the less than the 3% that was distributed to Black founders, well, that's a gamble most VCs hadn't ever been willing to really make. You know, Black founders, specific tech space, you know, it's like, who are you, where did you come from, and who's gonna vouch for you? So again, your network is gonna play. And I do have to say this because I brought it up a couple of weeks ago with some peers, is that a lot of times in the tech space, you're competing against credentials that a lot of minorities don't have. And it's your Stanford graduates, it's your MIT graduates, it's your UCLA students who come in who have some base and some ground of understanding that a lot of minorities don't. What we have is the desire to create something we know that people have a great need for. But we understand too, there's going to be some deficiency in our ability to understand the entire universe of technology. So here comes the team building component that sometimes we miss out on. We want to bring in a team that knows what they're doing, or you should bring in a team that knows how to support you. And a lot of times we don't even know where to begin to look. That's another thing. So there are a number of issues, but when it comes down to women getting less money, I mean, this is the wage gap, is everything associated with gender bias. And I would tell you there are some badass women out there in the tech space, because I have to go up against them on a daily basis and they know their stuff. And I could tell you in a room of men, I'd bet on them any day just because I know they'll get the job done. So it's really about us being the ones to shift the way the world sees women founders and bring them to the forefront of conversations. Because for me, if I even find 3 women founders, I'm like, hey, do you know this VC? If not, I'm doing a direct mixed message connection right now. And I think there's just personal accountability in that and making sure we help to further that. But I can tell you, I'm very hopeful about 2021 with a lot of the work that's coming out of women-led organizations.
And I think kind of what we were saying earlier with the success of Kiva was a lot of those small donations, or not donations, the small entrepreneurs that were getting lending throughout the world were women. You know, they were the ones that were the most able, and that's just a fact that I mean, even Muhammad Yunus says it, you know, it invests in women in some of these places because they're asked to lend the money back. They take care of the family. They know, you know, the children, they're already, you know, watching what's going on with school fees. And so their ability to keep accounting for it has just been proven to do it. Now, you know, when we're dealing here in the United States and in the VC world, I think what you're saying about women who really just know their stuff and just confident on it, that is, I think, the key to a lot of this is just keep showing that there's a need for it.
You have to be motivated in this space. I have to tell you, you're going to get hit with 17 no's out of the gate. You know,
right.
you can be as cute and as friendly and as nice as you want, but you got to lead with some real zest. And again, I'll go back to the fact that, you know, the making your skin a little thicker in this space is a requirement, because you have to understand that. And I'll give the VC some credit too here, because they look at a lot of stuff. You know, a lot of times we don't realize, we just think that we're the one unicorn that's going to walk through the door, when in reality there's a stack of about 1,700
right,
you know,
right.
ideas on their desk, and they have to figure out which one is the idea that they're willing to put their money behind. And so it's your responsibility to make those content, understand what means, understand how diligent you have to be in the course raising that money, and also out of this, like, we a lot of times go without things just because we fail to ask people, you know, what do